story and the effect on something everyone cares about, your money.
We do. Today on Wall Street, as we have reported, the Dow Jones had its worst drop since 1987, the Black Monday stock market crash. The Nasdaq and S&P also saw big declines today. Joining us now to talk about the impact is Craig Bolanos. He's the founding partner and CEO of Wealth Management Group. Everyone's peppering you with questions.
That's right. And we want to know, Craig, how much value has the stock market lost now since this coronavirus outbreak? And are we heading toward a recession?
Oh, Patrick, I'm so happy you asked. Two quick things. We are down 28% in just over a month. As Marion just said, single largest decline recorded today since 1987. And will we have a recession? Won't we have a recession? That's yet to be seen. But the reality is consumers are changing their behavior radically, and that is slowing down this economy at a very rapid pace.
People are a little freaked out, and with all the closures and the travel bans, it only adds to the anxiety. What should individuals do? I know they shouldn't look at their 401k right now, but what else do you, a week out from now, a couple weeks out from now, what do you recommend they do?
Well, I want to go back to something we talked about on NBC5 twice earlier this week, which is, jokingly, if you can't handle it, don't look at your 401k. But in all seriousness, I want everyone centered in their finances. I actually want you to look. And the reason I want you to look is I want to see your money, and I want you to say, hey, how does this money affect my short, intermediate, and long-term plan? And if you're a young saver, keep on saving. If you're on the cusp of or already in retirement, if you haven't done it just yet, you ought to make sure you have 2 to 3 years of safe money stashed away in bonds or cash, because if you do that, you can ride through anything, regardless of what this coronavirus throws the U.S. economy.
So just real quick, you're suggesting people take their money out of some secure financial vehicle and try to get it into a savings account even though they may have lost value?
No, it's a great question. So what we've talked about time and time again is everyone who's investing, whether it's your 401k, whether it's your child's college fund, you have to invest with a plan. You don't just blindly pick a pie chart. And if you don't have a plan that has already set aside a couple years of safe money, which you should have had going into the beginning of the year, it is still not too late. And I don't think that we have that much further to go. The average bear market, and there's been 12 of them since World War II, has brought us down some 30%. How far are we down, Patrick?
28%. Well, yeah, and you're right. The good news is we always come back. The stock market always rebounds. But how long do you think it'll take for us to get back to where we were?
Well, I think the reality is we actually don't know that yet. And the reason we don't know that is we are waiting for what is going to help. And what is going to help is we need Washington, D.C. to come through with a targeted fiscal stimulus package that helps who? Small to medium-sized businesses, focuses on the consumer by focusing on health care. When we get that, I think you're going to get a bounce in the stock market, which might be a good idea for those that need to reassess their risk tolerance to maybe implement some changes when that happens, because it just about always does.
And if you can afford it, go buy. Get some deals.
Oh, I think, you know what are you going to do? Are you going to buy government bonds yielding less than 1% for 10 years? No, I'm going to buy great companies of America that pay dividends.
Thank you, Craig. Appreciate your time.
And we have more information. Stay within